Hi, this is Elliot Eisenberg of Graphs and Labs here to catch you up to date on the latest in residential sales data for both Hillsborough and Pasco counties. And it continues to be a story of inventory. Yes, inventory's up 200 or 300% from a year ago, but remember, a year ago, Omicron was at its worst, interest rates were 3%, and houses were flying off the shelves. Now, house prices are still higher, inventory's up, but objectively, it's low. It's just 2.2 months of inventory, not very much. And similarly, if you look at median time to contract or actual number of units, yeah, it's up a little bit more or less than 200%, but it's still objectively low. Nationally, inventory's at 2.8 or 2.9 months. You're doing well. As a result, prices continue to rise. They're up 7% single family in both Pasco and Hillsborough counties, and they're up double to triple that in Pasco and Hillsborough counties on the multifam side. If we now turn our attention to sales activity, it's down about 30%, but in Pasco multifam, down just 20, so a little better. If you look at pending sales, they're down 30% in Hillsborough, only 10% in Pasco, so a little better in Pasco. And if you look at sales price to original listing price, it's fallen from 100% for both single and multi in Hillsborough and Pasco to 96, except in Pasco multifam where it's only down to 97. The market is clearly weakening, but it's doing a little bit better in Pasco and specifically in Pasco multifam. And again, home prices are up 7% on the single fam side and 2 to 3 times that much on the multifam side. If we now turn our attention and look at the national economy, the first half of 22 was pretty crummy, negative GDP 2 quarters in a row. No recession, but negative GDP. But the second half was strong, so we entered into 2023 in very strong shape. That said, 23 should weaken as the year progresses and probably bottom out somewhere late in the year. And that's because the Fed's been raising rates a lot. And I think they're not quite finished. They're not going to finish raising rates until they raise them a final quarter point in late March. And that will bump up rates, Fed funds rates, to almost 5%. The Fed is being vigilant because they're fearful of inflation and they're fearful of lowering rates too quickly and having inflation rear its ugly head. As a result of that, inflation will continue to fall. And that should help mortgage rates because treasury rates will also fall. The Fed is, as I mentioned earlier, very concerned about inflation. But the key thing that I'm concerned about going forward, however, is a recession. I do think it's likely that we will have a recession. I've been saying that for a while. That said, I also believe it will be relatively short and not particularly deep. So keep that in mind as you go forward. That's it for now, and I look forward to seeing you next month.